Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamilov, my partner in crime. We are back. I hope everybody had a nice weekend. Really interesting trading day on Friday, the first down two sigma day, as you would like to say, or whatever, or close. Uh, Down about 140 handles, and it looked a little skittish. And then we rallied 30 handles on the bell, and we're up 40 today. So we've really retraced more than half the down move, of which was the first down move in over 6 weeks. Um, and really, since we made the lows, and interestingly enough, looking at the markets today, I mean, there's just this insatiable appetite to buy stocks no matter what. Um, I do believe we're in a bubble. We'll discuss a little bit more about what that bubble is and how it's different than other bubbles that we've been in. And as you know, we could stay in a bubble for a year, a year and a half. We could stay in a bubble for a month, but this is bubble territory. I'm going to get into why later. But overall, for the opportunistic trader and for our subscribers, we've been doing very, very well. And I'm happy about that. We had a little bit of chop for about a month and a half. And now all of our products are up on the year, the LSP, which is my favorite best product that we have, the S&P spread trader product, has had like 17, 18 winners in a row, and now is back to flat on the year, which probably people in the product didn't think that was going to happen, but it did. And now we're about to take this thing up to a really good level, as long as volatility, today kind of stings because we closed above 20 vol, but we want to really exploit this thing when we're up here at 20 vol plus. It's tougher. We've discussed it every single day about the price of the straddle, and I'm sure the price of the straddle has come in a lot, since the overnight. But
Where do you think it is this morning?
I would say it should be about $30, 28 to $30 at least.
Pretty
But
close, 32. I'm seeing 32.
right. So that's great vol for us. That means if you go 40 down or 40 up, it gives you a lot of protection, especially if you pick direction. And we're able to get $3 on that, where a week and a half ago or a week ago we only got $1. So premiums are back in the market. A little bit of
By the
uncertainty.
way, I'm sorry to interrupt, but I think it's important for people watching to compare these straddles day by day. Like on Wednesday, it was a 20, right? On Thursday, and I I flagged this for you, like at 9:30, it was a 28, right? So that change was pretty telling about what was coming next.
Well, usually these guys are pretty right when they're making these markets. They're wrong on one side of the market, and usually it comes back in line. But to me, looking at how we went out on Friday, what what was going on, and then to come in this morning and see the markets up, you know, 40 handles, and then it's not big, huge moves, but this isn't a good opening in my mind to buy. It's a little bit tedious to sell it because everybody's thinking, hey, the market is ridiculous here after Friday. It's going to come in. So, usually I'm 100% sure on an opening, like I was on, I think it was Thursday morning off of these earnings where S&P was only up. The S&P, listen to this. The S&P was up 48 handles, and you had Microsoft up 50. You had Meta up 80, and we're up here, and I'm searching. It's very interesting. Like, I'm searching stocks, and I don't see this up opening. I mean, they can make it by buying esoteric stocks to bring the cash in line, but Microsoft is only up 3 points after going down like 80 points. Coinbase, which went down 25% last week, is up 1%. That doesn't look that good. Nvidia, the giant of all giants that moves Procter and Gamble every single day. No one knows why. That I also want to get into today. Why they're taking away and adding $250 million or $250 million of market cap, which is the market cap of basically most of the big S&P 500 companies, Procter and Gamble, etc., bigger than all the oil companies out there. How is it adding that kind of market cap every single day? It has zero to do with how many chips they're selling or what their business is doing. It's a gambling casino. So we could get right into it. Before we get right into it, I want to cover sort of all the markets, get everybody in tune for what we think is going on in the tape. And the first biggest move is the bond market. So we could start discussing Friday's number. Trump fires the head of the BLS, who is basically just the messenger of the number. She didn't make up the number. The number comes to her and she puts it out. There were a lot of revisions, but the revisions have been going on for a really long time. I mean, last year we had massive hundreds, if millions of people revisions. So the revisions have been going on for a long time. It's weird to me that he's angry about one number and he's mad because it didn't come in the way he wanted, so he fires a person. I think that's a little concerning. But really the takeaway is the bond market. The 10-year note is down to 420. I don't think it could go below 4% here, unless the Fed is going to become more aggressive. And now the September rate cut is on the board and is a done deal, pretty much. So we're going to see a September rate cut unless things show massive inflation. So you know Powell's going to be his best friend in about 2 months. So I don't know how that affects a market that is gone straight up, to make it even more bullish. But rate cut is in the market. Bonds had an extreme move of almost 25 basis points from high on Friday to low today. That's probably what they're going to cut. So now that's in the market. Currencies, thank God, it traded down before the number. For our OFX product, which is currency trading product, we are back positive on the year. That was our best product last year for our subscribers that traded currencies with us. We really killed it there. And once again, we're making money. And our next trade here, we're just waiting it out, but we're going to get long the US dollar against the euro, which means we're selling the euro, and we're going to probably buy the yen, which means buying the dollar against the yen. So those are our two trades, but right now it's not setting up. But that's the two things that we're looking for here. In bonds, I like bonds to go higher. Uh, I don't know if you're in that camp. I know you were in the other camp for a while. I don't know if you flipped. And then the other markets that we look at, oil, which is back to 65 in no trade land, and gold kind of flat, rallied off the low about 80 points off of the jobs number. And really, things are pretty set up. The one market, like the S&P is surprising to me. I would have liked to see, a down opening with some kind of, you know, volatility and people being a little scared and, thinking, because I took a little temperature this weekend of people that I know that are retail investors, but they're high net worth retail investors. They were all a little bit nervous that the market looked skittish, and now they turn on their screen or they go on their computer and like, okay, market's up, I don't have to do anything. So I don't love this opening. Again, I am not bullish. I think we're in a bubble, and I'll talk to you about that. But I'm going to throw it to you to give me your thoughts. You were yelling at me on Friday that I was calling you bullish, but I guess that was probably the right way to be. You were literally in tears on Friday. It was crazy. I'm not bullish. You're telling me whatever. So now I'm throwing it to you. You can tell your true story. So give our
So
subscribers
I think
something to
the
go
difference
off.
between me and you know, you made this this little pullback in the market. I think you're anticipating like a 10% correction in the market right here, right now. I
I
think that's
am.
where the difference is. All I was looking for was about 2 to 3%, and we're kind of like here. I just don't see the market dropping 10% unless there is an abrupt about face in the narrative about growth going forward. We're in the middle. We're still in the middle of earnings season, and earnings have been very good. At the end of the day, the market is going to react to earnings.
Earnings
Um,
are listen. Earnings are over.
Hold on. The move on Microsoft the other day, that was an obvious short. That was kind of like the speculation, as you said, which I agree with, was rampant. I know this for a fact. I even said it last week. I had people calling me last Monday, last Tuesday, that have never traded some of these names they were mentioning, and they're like, "Hey, I'm going into this on calls ahead of earnings. What do you think?" I'm like, "I don't know. I never traded this," but they were certain, right? So
That doesn't get you nervous. That
that got
wait,
me
it's
nervous.
over
That got
because
me
they said it on
100% got
Thursday.
me nervous. That's why I wasn't long after those Microsoft earnings.
Listen, I'm going to tell you
We got
fact.
our 2 to 3% pullback. Are you looking for more?
A lot
Because if
more.
you're looking for more, that means that you're thinking that the whole growth narrative, the market is going to start flipping and starting to price in lower growth. What? Because of this little jobs report on Friday, which, by the way, if that jobs report came in good, what would you be saying? You would be saying exactly what Trump is saying in reverse. It's a rig, right?
What, Eric,
So
I wouldn't be saying any of that. That isn't even what you're looking at here to me is not even relevant to anything that I'm looking at, whether there's growth or not. Okay. This market and every market I've traded for the last 40 years does not look at earnings for this quarter. They're out of the way. They're done. Okay. It's now what's going to be moving forward. And moving forward, there is no way that these companies are going to make the number. And like I said, yeah, we're having this podcast. It's 8:45 on Monday morning and the S&P is up 37. Talk to me when it's red on the day and they're panicking out the door. I have a long portfolio of stocks, okay? I'm long Nvidia, I'm long Coinbase, I am long Microsoft. All of those stocks will be exited by 11 o'clock today, okay? And if the market looks more skittish before that, okay? I'm very worried, okay? And I'm going to give you the reasons why. You're looking at like growth, can growth continue? I'm not looking at any of that. I'm looking at this. How many S&P day options traded on Friday? Day of options. That means they only have one day to expire. How many options do you think traded in S&P, okay, on Friday? The number is so staggering. Five.
we had more volume, 100%. We had more volume.
No, it's
We
not
had
more
more
volume.
volume
It's every
futures.
day. No. We're going to have that volume not today, because yeah, actually today in index and on Friday in stocks that are expiring, and soon you're going to be able to trade Nvidia day of options Monday, Wednesday, and Friday. So this is great for our subscribers because we're going to have so much more to do, and you're going to be able to trade, day of options every single day almost. Okay. And index, you can already do that. In gold, it's Monday, Wednesday, Friday. So what I'm telling you is we had 5 million expiring options go off. Okay. 5 million. That is not institutional. None of that volume is institutional. Institutions are not playing day of options. Okay. It's not a game they play. This is a game for the retail investor to quadruple their money in 2.5 hours. And they're losing. And that's what's making all of my products do so much better is the more speculation, the more the mispricing of options, and the more you need someone like us to do this with you, because we've done this for years. And we traded a massive amount of S&P options on Friday. And then I'll give you another one. Nvidia, which expired day of on Friday, traded 4 million contracts. 4 million. I mean, we didn't even do that in a year in equities, like in some of these equities. It's trading in a day, and none of that is institutions. It's all retail, gambling. So that's what makes me more leery than anything else. And then what makes me even more leery is that they're trading the beauty of options, which I've tried to explain to people since I've had this product open to the public, is options are the greatest thing ever invented because it gives you, now they're coming out with ETFs with double leverage, triple leverage, but options give you the ultimate leverage because you get to control 100 shares of stock on a $500 name for $300. Where could you ever do that? So that's why everybody's in these options. They don't really know what they're doing. They're inexperienced and they're basically gambling on just one day. And it's causing a lot of fluctuation in the market and a lot of uncertainty. So, when I talk about a bubble, people are looking at me and they're like, oh, yeah, this guy doesn't know. Well, I've traded every bubble, and sometimes it takes a year, sometimes it takes 2 months. But what I'm seeing here is just rampant speculation in just a very tight group of names, very tight. Okay. It's 10 stocks. It's, some days they go to quantum computing, some days it's crypto. And it's the same thing. And like getting to crypto, I was having a conversation with a friend of mine. He owns XRP or whatever, Ripple, and it went down to like 270 from 320. And I said to him, I go, how does this thing have a value? Like, why does it move up and down? Why does it have oh, there's banking transactions. Like, I'm thinking to myself, well, the banks don't have anything. The US dollar doesn't move because there are banking transactions. And I'll tell you something even more interesting. Wires from US banks now get wired within an hour. It used to be it'd take a day. Now, literally, some guy goes, oh, I wired you money. And the next thing you know, I look at my account and less than an hour later, it's in the account. So I think the banks are keeping up, through Swift banking or whatever with this stuff. But I just think, the market is frothy. I'm not saying, listen, we could do whatever. And I'm not looking at today's, like, I think today's opening is a very big fade, meaning a short. I'm a little bit leery because it looks so obvious. It looks so obvious that it may not work. But there are so many things.
Well, I hope it's a fade. I mean,
Why do you hope that?
I have some call spreads open. 60, 60, what is it, 62.90 call spread? What do you think about those?
62.90? I think they're a rip up. I don't know where they're trading. I mean, I got a bunch of stuff going on, but I'm
I hope
not,
so.
the decay is going to be very large today because the options were very, very high priced on Friday. But yeah, I mean, I'm going to look probably to sell an upside call spread off the opening, maybe $30, $40 above the money. I don't know what I'm going to get for that. It probably isn't all that good. But I do think the market's going to fade. And I may for tomorrow sell call spreads to buy naked puts. I love to do that. So I basically sell a call spread for $3 or $2, and then I go down and I buy a naked put for $2. And that's a good way to get a free short in the market as long as the market doesn't go up a lot. That's a strategy that I like. So there's a lot of things out there. There's, to me, I'm looking at the stocks that I trade that are like the bellwether stocks or the stocks that really make the market move, and they don't act so good this morning. That's why I'm surprised we're up like 30 handles. I mean, this stuff is barely up after, like Coinbase being up $3 after going down 65 points on Friday is not bullish action in any way. Microsoft, which was trading at some crazy number like 570, okay, or 565 pre-market, is 527 up 3 after going down 50 and then 10. That doesn't look so positive to me. And, the quiet giant that goes up every single day, Nvidia to me looks very heavy here and is $10 off the high it made on Thursday. $10 is 250 billion in market cap, and today it's only up $1.50. How is the Nasdaq up 200? I mean, I know how they're going to take esoteric stocks that you're not looking at and move them a little bit. Like they move this one a dollar, that one a dollar, they can get there. But really, the bellwethers are not up a lot. I mean, let me ask you this. The Nasdaq's up 85 basis points, up 190 points. Nvidia was down 5 on Friday. Okay. It's gotten back half the move. Nvidia is up way less than half the move, and it just doesn't look that good. That's the thing. So I don't know what they're rotating to, but I see a little bit of a rotation. So keep an eye on that. you know, Bonds are sort of out of the picture in the sense that yields are not concerning at this level. They keep coming in. Um, I think that they've, sort of made it as if the rate cut is in the market, but, we'll see. Market's up 35 pre-open. NASDAQ up 100. 80. Nasdaq outperforming. It's funny, when I woke up this morning, the S&P was here and the Nasdaq was up 140. Now the Nasdaq ripped and is up 80 basis points, and the S&P is up 50. So I don't know if they're going to run to that, trade again. I'm not really sure, but I'm happy that there's trading action again. I'm happy that there's a little uncertainty. I would say in the next week and a half that pretty much everybody will be kind of back around their desk. I know up in New York, schools don't start until September after Labor Day. Where I live in Florida, school's starting in like less than a week. So I think next Monday is the beginning of school. So anyone that has kids, they can't be traveling. They got to basically be back. So I'm expecting a lot more trading volume, a lot more action. And, I pointed out to you on Friday, the E-mini S&P on Friday traded 2.2 million or 2.3 million. And the highest volume day we had in the last like 5 or 6 weeks was like 1.1. So they were sneaking the market up, okay, on no volume, okay, no volatility. And then all of a sudden in one day, bam, you know, and when you do 2.3 million contracts, there are sellers around, okay, or people looking to hedge their portfolio. So I don't expect this as a 1 day event. Um, Maybe we open up, we trade
I don't
around,
know.
we go
The thing
lower.
about the volume, I could share my view, but my chart here. But the thing about volume, these volume spikes over the last 3 years, is that on every single volume spike where the market would fall, see right here, right here, right here, and then on Friday, that marked a kind of like a bottom in the market short term. Now, you look at 2022 when we were in a bear market, it was the opposite. You'd have a volume spike and then you would have follow through to the downside. So it's really, I think, just a
Yeah,
function of
but
whether you're in a bull.
Eric, as day traders or people that are trading for today or looking for action for today, um, I'm not disagreeing with you that the volume, obviously, especially when we go down, is going to culminate in heavy volume and a low. It's always worked that way from the beginning of time. But there have been many times where the market does volume, does a day like today where it's like a reprieve, then does heavy volume again, and then goes lower for a period of time, whether it's 2 days, a week and a half, a month. It even happened when we made the lows in April. We did heavy volume. We actually made a low, went back up, and then made a new low off that. And then there was more volume again. And then we, basically consolidated very shortly on the bottom and exploded up. So, you know, but one of these times, you're going to get heavy volume. People are going to exit the market. Listen, the market
Yeah,
is
I
now.
agree. But that's got to. I 100% agree. But that's got to be paired with an abrupt like narrative shift. That's why I keep asking you: are you expecting a 10% dip, or are you just expecting 2 to 3 to 4% dip in the market?
I'm expecting maybe on this move we're up 6.8% on the year coming into today in S&P. So we'll be up 7, which is a lot, dude. It's a lot. I'm expecting the market to trade negative on the year. From that negative point, I don't know what's going to happen. I'm lost. You're talking, we're talking EU, great trade deal, blah blah blah. Guess what, Eric? The EU never the deal is not even signed. Okay, it's not even a signed deal. So, I don't even know if the UK deal is comprehensive and signed, but I know for certain that the EU deal is not signed and not implemented, and no one knows what kind of tariffs are out there, who he's tariffing, what levels. This is horrendous for business. It's horrendous. I played pickleball this weekend with a business owner. All, stuff, not all made in the US, but mostly made in the US because some of the products he can't get. He's suffering. He doesn't even know what his tariffs are. He has zero idea. So this is like literally chaos that no one's talking about. No, you look at Trump and all these trade deals, he's got no. Maybe I don't even know if he has signed trade deals. I don't even know. Maybe he has one or none. Like, so are the tariffs in? Are they not in? Is it, there's a 10% tariff if we export more than we import, but if we import more than we export, it's 15, and some people have 30. It's very confusing. And as you know, there's no way to track it. No way. You could never track this. You need an army of people to know what's coming in this country. If you go to the port of Miami, your head would spin at what's going on down there. It's massive. So I don't think I think that that's the real fail here is that this whole tariff thing blew up on him. Okay, think about what he wanted first. Okay, what was the reason for tariffs? The original reason for tariffs were to bring back production to the United States. Okay, that failed miserably. No one's putting production here. No one. I know he got
Well,
Taiwan.
it was to reduce the deficit.
No, no, no. Yes, it was. That was reason number two. Okay. Reason number one was to bring back America. He rolled out Taiwan semi, everyone's coming here, da 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 da. No one's coming here. No one's coming here for a 15% tariff, 20%, or even 25. Just costs too much money. And it's a dumb move for them. So that didn't work. Then he did it to reduce the deficit. But now tariffs are so low they can't reduce the deficit. They're bringing in too little revenue. Okay. And the third reason was to, rain hell on all these guys that were, taking advantage of us. So to me, tariffs are out of the picture. And it's interesting that we're up because I felt like over the weekend, with all the tariffs and everything that was going on, that the market was skewed for a negative opening, which has not happened, obviously. But the tariff thing is still lingering out there. What are they going to do when the market gets bad? They're going to roll out a China fake trade deal again. I mean, how many times is the market literally? This just shows you how skewed bullish the market was. It rallied two times on the same trade deal in 1 week. Okay, then it rallied
Down
when the,
the EU,
the
right?
market
I
the
remember
market rallied when we destroyed Iran. Okay, we destroyed their nuclear capacity, which we didn't do. Okay, we're looking for regime change. That didn't happen. And nothing has happened with Hamas and Israel. Or what are we on day 4 until he's going to make Putin pay for the Ukraine war? I mean, all of these things are just so lingering out there, and how the market ignores it is I don't know. That's all I could say. I don't know what's going on, but it makes me leery, and I do think the market is in a bubble, 100%. I think there are so many signs. Like I have friends, they buy Nvidia at 120, it goes to 140, they say they're going to sell, they never sell. Then it goes to 160, they say they're going to sell, they never sell. It goes to 180, they never sell. When are they going to sell, Eric? Never. They're never going to sell.
So when I
Well,
say when I say banking on crazy, this is what I mean. This is exactly that like
But,
drive,
but this is so
that
not crazy.
insatiable appetite. They're not going to sell at any price. So okay, let's say there is a bubble. Let's say there is. You still have to kind of respect the bubble a little bit and let it inflate a little bit.
Oh,
So
this is a top four inflated bubble that I've ever seen. And this, I could give you reasons for every, bubble. Like the 87 bubble, people didn't understand the market. It was in the infancy and there was portfolio insurance and people hedging risk and they didn't have the right hedges on. And the difference back then is the big players, the Tudor Jones, whoever, could control the market and move the market down, put players in a position to not have the money to keep their positions in the option market, which was, probably about 15 years old at that time. Okay. Didn't know how to utilize hedges. And, that day we were selling puts at lower than zero. Like that's how crazy it got. It was just that was that crash. Okay. Then you had the internet crash, which you pretty much know about. And that was the first time retail really had the ability to speculate. I was at Spear Leeds and Kellogg. We were the largest market making firm and professional, clearing firm in the world. And in my office in Boca, we had half of one floor our prop trading department, and and they they were coming in, doctors, lawyers, businessmen. We had the entire building filled with traders, guys that left being lawyers and doctors and became professional traders. That was the obvious. Okay. Then we had '08, right? '08 was, the housing bubble, max speculation. Then we had COVID, which I wouldn't call a bubble. That was like an event that we've never seen, like a sci-fi movie that caused.
well, I'll backtrack. I'll push back a little bit. Before COVID hit, okay, we had like 10-point straddles every day, or 15-point straddles every day. The market was at max complacency right before news hit that something was happening in February. So just
Well,
go
let,
ahead.
let me let me
You
explain
remember
something.
that, like right before
Yeah,
COVID?
but let me explain something. We have the same exact thing now. So here's how you know here's how you know you have the same exact thing. You ready? Back then, the S&P was at 3,000. Okay. So to have a 15-point straddle is the same thing as today having a 30-point straddle because the percentage move is the same. So, how the hell could you have a 25-point straddle on a $3,300 stock? It's obscene. So, what you just said exactly plays into what I'm saying. So, go back to COVID and the S&P was half the price of where it is now. So
Right.
a $15 straddle is a $30 straddle. We had an $18 straddle last week.
I
Okay.
don't
That's
remember
way worse.
exactly.
That's way worse. So that plays more into this
Correct.
bubble thing.
You are correct.
I'm
You
just
are
saying
correct.
we're in a $6,000 product that they're saying can't move 20 points.
Yeah,
I
but
mean, it's so far.
what I meant was the market was extremely complacent right before COVID.
And you don't think we're complacent. You just said
100%.
before that we were so complacent and we have $18 straddles. You had an $18 straddle. That's like ridiculous. That's like a $36 straddle, on the old days. Okay? Because this is double the price. This is more complacent than we've ever been. Okay? That's why if you look at my LSP, my spread trading product, we didn't make a trade for like almost a week because you can't. It's too low. So the bottom line is the complacency level. How can you think the complacency? We
The
haven't had
VIX,
a
the
till
VIX on
Friday,
February 14th, the VIX on February 14th, 2020 was at 1370.
and we were at 15 now. We were at 15 coming into this down move. Okay, 3 days
So
ago, the VIX was 15. The inherent volatility on S&P index was 8. 8. Okay, that was the inherent day over day vol was 8. It was 0, dude. We've never had vol this low. It's as low as it's ever been. Now it's not. Now it went up like 25% in 3 days. Okay, so now we're like back in a decent level to trade, but come on, we went up 6 straight weeks in a row. We haven't had a down 1% down day in 2.5 months coming into Friday. I mean, that's why I brought out the birthday cake on Friday, because I was celebrating that I had to give the market a cake because the market freaking had a 2% down day almost in S&P. I mean, come on, Eric. These are all
that cake
reasons
is going to
why.
go stale. I think that cake is going to go stale next time you pull it out.
All right,
'Cause
well,
I don't know. I
that
mean,
won't happen because I ate it. but listen.
whenever we have a down move, all I want to know, I start thinking right away because I know the market is crazy, right? And
Well, why do you think the market?
they're inherently always looking to buy the dip. They're always inherently looking to buy the dip. So I start asking, okay, is there a narrative shift? Is this going to be a 5 to 10% correction? Like I know the 5 to 10% correction is coming. My question is when? Is it now or is it when the Fed is going to be due to cut rates and maybe they won't?
Oh, stop,
Which brings
stop.
me back to the bond market. I'm like looking at the bond market. I'm like on the Fed day, right? They priced in the Fed swaps collapsed. All right. They were pricing in no cuts. And then we get a little jobs report on Friday, a little bitty jobs report. Like, who cares about these jobs report? All these economic indicators are mostly priced in. That's why we're up today because we fell on Friday on the jobs report.
Eric,
This is
the
always
job,
the
the
case.
the job.
Economic data comes in, market reacts within 48 hours, it's gone. Right?
No,
So
I can't do it. We're deep in the podcast. I can't deal with the disrespect of the market of how you literally. Oh, the move is gone. We didn't even open today. What if we open here and end down 50? Is the move gone? I mean, we
I
haven't
hope
even
we do.
started
I
trading
hope we
today.
do. Larry, I hope
I
we
don't
do.
care what you hope. It is what it is. I mean, I know you're bullish, but you're short. I don't know what does that mean. Like you're on here going, well, the market never. Da, 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 da. It's almost like you're cross talking your position. If you're
No,
short, then
because I
you got to
respect the
think the market's going
It's
down.
the
Are you
difference. You
short
don't
the
respect
market?
the bubble. I respect the bubble.
I'm asking you, are you short the market?
I have call spreads open.
So that means you're short the market. Okay. If the market goes up more, you're going to lose money.
I
So
also
if
have put
if you
spreads open.
think the market is banking on crazy and it's not going to have 2 down days in a row and it's always going to go up, why would you be short? You could change that right now.
They're 62.90s. I'm playing the vol. I also have put spreads. You know where I sold my put spreads?
Oh, all of a sudden you're disclosing you have put spreads too. Okay. Dude, listen, it's all good. I don't know what you're thinking
I
today.
have the
It's the
iron
same as
condor on.
every podcast. It's like, I'm telling you
By
today
the way, we have some
that
questions coming in from your viewers. So
yes,
they want to know how we price the straddle, exactly how when we talk about the straddle,
how we price it. We don't
how
price
do we price it?
we do not price the straddle, number one. The straddle is priced for us based on volatility of the near expiration put and call. So we don't price it. It's based on where the put is trading and where the call is trading every single day. And that is based on the volatility and the amount of movement that the professionals, or in this case, market makers, whether it's Jane Street, Citadel, Morgan Stanley, JP Morgan, price the spread. So we don't price it. It's priced off volatility for the day, and the VIX is priced off of the 3-month straddle and the short dated straddle. So that gives you, you know, the pricing. We don't price it, so we just, we report it and we trade it, but it's based on the volatility and the amount of move that they think the market's going to have. And like Eric said earlier, on Thursday, the VIX popped up and that straddle went to $28 from $18, and today it's $32. And that's because the VIX is 19. If the VIX goes back to 15, that straddle will be back to $18 for the day.
So for those watching, when we say the straddle is 32, if you look at the option chain, like literally right now on SPX, you could look at 62.75 calls and 62.75 puts, and that gets you to around 32.
Exactly. So, that's the straddle. It's an important tool to use every day to gauge market movement. A lot of times it's wrong. It was severely wrong on Friday. It's been wrong a lot. So when you trade the straddle, which is a really pretty good thing to do, you got to pick a direction. I know you like to do both sides at the same time or whatever, like you just disclosed your puts and calls. I don't know what you got.
I was active last night. That's why I don't want to really get into my, because it's like it's not. I put these on. I was trading the overnight session, which was a great session to trade.
It was.
So yeah, this whole year overnight session has been great. But I just want to say also, when looking at the straddle, like I mentioned on Wednesday, right before the Fed, the straddle was pretty low. On Thursday already, and we talked about this on the podcast on Thursday. I was like, look, straddle was 20 all week. All of a sudden on Thursday, 28. Like something is different, right? So
Oh,
these
Eric, I know, but that's based on volatility. Somebody was bidding vols, so that makes the straddle worth more money. Today, if they smash the vol down to 18, that straddle for tomorrow will be $26. And basically, if they smash it down to 16, it'll be $23. It's all based on
So do you look at it like,
volatility.
let's say the straddle is 20, 20, 20, 3 days in a row. All of a sudden, it's at 28. There's no real economic events upcoming. Does that get you like looking at the market like, okay, there's a bit, there's a
Sometimes, I mean, listen, there was a period of time when we were working together, and I'm glad you probably don't use it anymore. You use VIX every single day. Like you're like, oh, the VIX is up, the market's going down, and
well, I
you're
don't
gonna
use it because now we have zero DTE, and the VIX is just a blunt force tool that's measuring vol out like 20, 30 days. Now you can precisely measure it zero DTE.
But for people that are watching, we use the straddle to price what we think the move is going to be for the day or what the professionals do. And I think it's very important to have that in your setup for the day. So, like, if that straddle was $40, you're like, holy cow, this is good. There's, going to be high vol. Like today, listen, I mean, I'm shocked that the market, it's not up a lot. We're up 50 basis points, but after having a 2% down day to come in up here off of really not a lot is interesting. But, we haven't really touched on European markets are up 1.5% after getting destroyed. They don't really play that much into our market, but you know, um, I'm just looking at the stocks and they don't look that good. So, I would keep an eye on Nvidia today. Nvidia, if this was 2 weeks ago, would be up like $5. It's up $1.50, looking a little bit $1.80 now, looking a little bit heavy. But, I want to get close to wrapping because there's about 15 minutes before the opening. So we covered the bond market. Um, bonds could come in to 4% on the 10-year. It's at 4.19. I mean, I don't expect that. But if the numbers start getting even weaker and weaker, the Fed. But I don't know what is. Let me ask you this: what is so exciting that the Fed cuts a quarter point from 4.25, 4.25 down to 4 to 4.25? Why is that so
Honestly,
exciting?
honestly, I don't know. I don't know why the market
No, but I'm saying, but what's so exciting? It's
doesn't.
still very, it's still very high rates. they're not really going to be able to go too far. The market is confused on tariffs. No one knows the impact of what tariffs are going to do. And Donald Trump is running around saying, cut rates, cut rate. Like, what? For what? Like, I don't know, to make somebody's debt.
I think he's looking for like 100 basis point cut.
Okay, so then we'll be three and a quarter. That's so much higher than when we were zero. Like, listen, to me, I would think it's a disservice as an investor with money. Now, listen, there's the whole group of people here speculating and needing massive market moves on a daily basis and don't have enough money to retire or put money away. But people out there that have money, to retire or whatever, I would think you would want to have a significant portion of your capital in 4.5% yielding products, whether it be munis or, corporates or whatever at these levels, because probably rates are going to tick lower and potentially the market's going to go lower. And what's wrong with getting 4%? Like, I'm not understanding. Like, what are you looking for in the stock market? Um, any little correction here takes us to unchanged on the year. I mean, this story hasn't been written at all. And I'm telling you, it's very speculative out there. This option volume thing is really bothering me. There should not be days where the S&P is trading 10 million contracts and most of it is in zero DTEs, which isn't hedging. Hey, these indexes were used as hedges against long positions, ways to get long. Now it's ways to
Now
gamble.
they're more indices than stocks.
No, and then you have all these ETFs, triple leverage silver against double leveraged crypto and throw double leverage gold on top. You don't think that that's
Oh,
like,
send me that ETF. That sounds good. I like that one.
there's a lot of these out there. I can send them all to you. A friend of mine runs one of them and it's insane. It was down 25%. Now it's up 18%. I mean, it's moving 50%. I mean, it's crazy town. And what happens if these things actually get hit and correct? What if crypto goes back to 80,000? These products are built to fail. Like, these leveraged MSTR,
Well, stay
there's a
away
whole
from
thing out there, yield max.
advice for everyone. If you're looking for a long-term play in ETFs, never buy leveraged because just the way the dynamics within the
No, they're all
ETF.
set to go to zero, but like there are products out there like Yield Max. They're doing like sort of what I'm doing when I'm trading, but they're losing 25% on NAV on their net asset value and giving an 18% dividend. People think they're getting a dividend of 18%, but they're down 7% and they're spending the dividend. It's but that's out there, dude. I'm telling you, there's so much speculation out there that it's unbelievable. But for me, today is a weird one because we should be lower, we're higher. People are going to try to sell a little on the opening, and who knows where we're going to be. And that's
Iron
what.
condor kind of day. What do you think? 40, 45 points both directions. Do you think that's going to work?
I'm not doing both directions. I'm going to sell a call spread off the opening, and I will not go to a put spread until the market comes in, decently. And that's it, really. That's the story. And I'm sticking to it. We'll be back to everyone tomorrow, but I do see a lot of things in here that things are picking up, and I think they're going to pick up through the end of the year. And I think the story hasn't been written. And I'm long a bunch of stocks this morning against short some options, and I'm going to look to get out of my long stock positions, by 11 o'clock today. And we'll see. We'll see if the Nasdaq just keeps rolling higher and higher and higher, and I can't see what's up in here because all the stocks I own are not really moving higher. Um, you know,
It's all over the place. I mean, everything is up.
Eric, I know that they're spreading it around. Before they
Yeah,
weren't spreading it around. Now they're spreading it to stocks, esoteric stocks. But markets here, let's look to the upside after the opening. And I wish everyone a great trading day. And thanks for the questions. And you can always view us live on YouTube. And enjoy the day.